Good morning, everyone, and welcome to the Quantum Leap Morning Leap for Monday, February the 8th, 2016. My name is Doug McKay. I'm the founder and head moderator of Quantum Leap. Each morning we get together to take a look at the market, macro to micro, drill down to the structure of the market, where our trade levels are going to be, what our targets are for the day, and what our main hypotheses are. This is a subscription room. If you're interested in coming in and taking a free trial and checking it out, we do these live sessions each morning, and then during the course of the day we do live trading and analysis throughout the trading day. If you're interested, send me an email, quantumleapfutures@gmail.com. There's no website. This isn't a commercial venture. This is a group of traders working together to find trades and learn how to trade this market. You will need a Skype account. It's free to open up a Skype account. It's very easy to do. Send me a contact request at Doug_McKay. If you like this video, there's over 300 days of pre-market trade plan setups up on YouTube. Just do a search under Quantum Leap Futures. And if you like what I do, follow me on Twitter @Crazy2. All right, so Friday, we were looking for critical mass on the weekly to kick in and go down and hit our weekly and daily target. And basically, we broke out of the value and out of range from Friday. And once we did, we just sort of grinded our way all the way down all day until we got down to the weekly. We hit the weekly ATR at 65.75 to the tick, missed the daily ATR by 2 ticks, and then the buyers came in, rotated us up 10 points, almost 10 points, and then basically just chopped around in the open and reclosed at 18.75. It was a good day on Friday. I made my money, and then they took the rest of the day off. News today. Today, bank holiday in China. There's really not a lot of news. We've got building permits that just came out in Canada. I should see what the results of those were. Oh, they came out a little bit better than expected, and way better than the previous. So that's good news. 10 o'clock, we've got labor market conditions index, and then 12, we've got Canadian Governor Lane speaking. Other than that, that's about all the news we have for the day. Just taking a look at, we're putting out the QLTP again. It's still in beta. It's based off of all the work that Howard and I do with the homework sheet. I want to take a look at the COT report. Bring this down in size. I thought it was interesting that this right here is the ES. The orange or yellow is the small spec. The light blue is commercial, and the dark blue is large spec. Your zero line is right here, and you can see that commercial, who has been getting more net short, popped up last week and is now net positive. Large spec is still getting more net short, and we're getting less net positive week over the last 2 weeks over the last week before that. So interesting that the commercials, this means that we do still have a bounce coming with commercials starting to buy, not quite yet ready to see this market completely sell off. But since the open, and then make sure, just one note on the QLTP. The QLTP is printed out each day and put into the room. It's got your news. It's got a work area. It's got, I don't know why my computer is starting to freeze up again. You think with the RAM I've got, it wouldn't. You've got your pivot points on the daily, weekly, and monthly, your key numbers, and then all the ladder gives you a ladder above the previous day close, and a ladder above the previous day close, with all the key elements that we're watching in terms of the different methodologies that we do. And what you're looking for is to use this for clusters and guides. Once everybody's comfortable with it, then I'll start adding my trade levels to it and my hypothesis, and it'll look like this one right here. And the trade levels will actually be overlaid on top that I'm looking at. That doesn't mean that they have to be the same as yours, but it gives you a good idea of where different traders are going to react in the marketplace. Again, it's just used as a guide. Each morning I like to start my day off with just a simple candlestick chart, and starting with the Monday, or the month I should say, I'm using 9 EMA and a 20 SMA. I'm looking just where are we within the trend. Do we have a strong trend? Do we have slope and separation of the moving averages, or are we challenging the trend? And on the monthly, you can see that we have the possibility of this downward trend on the monthly. We still have a possible FUBAR Mr. Sneaky on the monthly as well, which is a reversal pattern to the upside. So although we're violating the larger time frame trend that we've been in for several years, we are showing the possibility of a bounce. You can see we had FUBAR Mr. Sneaky here, and it bounced. This one's even a little bit more strong because it's got a technical gap as well, where the other one didn't. Going to the weekly, you can see that the weekly trend is down. We've got slope and separation, but again, we do have a naked cross up here at 2010. It's on a weekly time frame. You have to put that into context, but it does have unauctioned business to the upside as well. But right now, we've got slope and separation to the downside. We rejected the 9 EMA. The overall trend on the weekly is down. On the daily, let me just get rid of this open interest. On the daily, same thing. We had a nice strong trend down. They tried to violate the trend. They failed, and so far we're working our way down. Our month open and our week open and our day open is 1929.75. Is that correct? No, it's not correct. Sorry. Our week open is 1876 and a quarter. And our day open is 1876 and a quarter. But we are seeing a continuation pattern to the downside on the daily. Going to the intraday to see where we are coming into the RTH session. Very strong downward trend. We've got a bit of a technical gap going on here on the 4-hour, but we do have slope and separation to the downside. Likely get a little bit of a pop. The overall trend on the 4-hour is still down. On the 1-hour, same thing. You've got good slope and separation. There's actually a flag formation on the 30-minute that I was looking at earlier. So if you wanted to draw a little channel here, you see that we've got this flagpole formation, and I'm just curious, I can measure this out. I go from here down to the breakout point. That gives us a measured move down to 1133 area today. 35.36 is what I'm watching for the day, and I'll show you why when we get into the market profile. But the overall trend is being challenged right now. We're testing the 9 EMA. If we get above the 9 EMA, we could still come up and test the 20 SMA up in the 1866 area, another area that I'm looking at based on structure. Going down to the 15-minute, let me just get rid of these drawings. Going down to the 15-minute, we've had this very strong downward trend. They are, trying to violate it right now. We're above the 9 and the 20, so we could get some sideways consolidation. They've had a nice little run off of that 43.75 all the way up to 54 so far. Value is still above us. And going down to the 5-minute, you can see that we've got a start of an upward trend, but we just did create a naked cross at 1849. I'd rate that in your journal as a possible destination to the downside. A lot of the naked crosses and a lot of the repair of the auction we took care of above us right now, so I think we see some continued exploration to the downside. But let's look at the big picture and take a look at where we are. This is probably the most important part, is we've now, from Friday, we have fallen outside of this balance area that we were in. The microcomposite I'm watching right now goes from January 7th through to the to Friday. You could take it from here as well, but it's giving me all the same information except for the value area is slightly different. And I'll bring this up and you can see this. Bring this to the front. And the reason, people ask, I know that Murad FT is running his from here. He's using the gap up, the gap down day, and the auction since. I'm using the gap down day, but I'm using a gap down day that's further out. And it doesn't matter. You could use both, and both are valid. This just gives me, the longer time frame gives me a bigger picture. And the value area low on that is 64.50. Well, the value area low on the smaller time frame is 64.25. So, I mean, it's pretty much the same. And the VPOCs at 1890, remember we did have our VPOC up at the 16, then it went down to the 6, and now it's back down to where it started down here in the 1890. So value is coming down right now. But the most important thing is that we've broken below this this value area low. We're outside of balance. We're in price discovery, and we're seeing some weakness coming in. We came down and tested this key line in the sand. It's a key support level here at 1848. Below it, I'm looking for a bigger move down towards the 42s and 35s. 35.75 CHVN. 36 is our daily downside ATR target. Our weekly ATR target is all the way down here at the 1809 level. So now that we're outside of balance, we've got a lot of repair work to do down here, and we could come down and explore inside of this particular balance area that we were in all the way back here when we found buyers for this, for this run up, which goes back into, October of 2014. So if we can't get back above and get inside of this value area at 64, and we can't hold 48.78, they're going to work their way back down here again. And they'll probably come down and test the lower side of this balance area down here at 1783, probably even to the next big target below, which is all the way down in the 1765s. And then from there, we've got to go back and bring in some older volume to show us some more information here. I'll be shifting my composite once we get back into the 1700s to a earlier date than what I'm using right now. Right now I'm using January 1st or January 4th, the start of 2013. So we're, this is key that we're falling out of balance. We're going to gap down today. It's going to be a fairly large gap. Gaps above 15 aren't likely to be closed. They have a lower probability of being closed, but we do have a large 20-day ATR right now. Our 20-day ATR is running at 48.40, so we do have room to get back up inside of this, up into our daily upside ATR targets all the way up at 1892. So we do have the ability to get up there. It's just whether we get up there. As long as we're below the 65, I'm going to remain looking for opportunities to short, especially if we get below 48.75. 48.75. 48.75 can be our defining line this morning. Below that, looking for a move into 42 and 35. 35 being the most likely destination for the day if we get down there. Maybe even coming down to the test the 24 to 27 area below us. If we hold above the 48.75, then I'm looking to just grind, slowly grind, chop in this area, come up and test 64.50. 64.50 to 67 is going to be key. If we can come up and accept that again, then we'll probably come back up into this balance and chop around here the next couple days. But if we fail today, I'm thinking that we come down, before tomorrow, down into the lower distribution zone down here, centered around the 1810 area. But for the day, 48.75, key line in the sand. So let's go take a look at what we've got that's happened overnight. You can see that overnight inventory is net short. We opened up inside of value, inside of range from Friday, tried to work our way up and basically got stonewalled at the 84 level. And they could never get above that 84 and get back above that VWAP from Friday. And then once Europe opened up, Europe just said, that's it, we're taking it back down, going into price discovery. So their inventory is net short right now, overnight. And we've got the slower distribution that is centers around the 1850. If we get above the 57.50, it's pretty thin. They'll probably squeeze some of the shorts, and we could see our short squeeze. But if they don't get above there, and you can see that 64 area again is our midpoint and gets really thin above there. So your warning line is going to be this 57. If they can get above the 57 and start working towards the 64, but above 64, that would be our key line and above, and I'd be looking for a bigger move up through as we squeeze the shorts. If everything stays hunky-dory and to the downside, and we break this 48, look for them to go and take out the overnight low, test the value area, and go hit the first target. That's going to be that 42.50 area. So let's take our overnight and put it up on our trade chart. So our overnight low is at 43.75. Our overnight high is up at 84 and a quarter, 84.50. And our previous close is at 1875. We're trading right now at 1853. Call it 53.50. So if we open up in this area, that's wrong, 1880. 1875. The calculator's not working correctly. And we're currently trading 1852. So a half gap fill is going to take us to that 64. Isn't that interesting? And that's just an approximation. I don't know where we're going to open. We still have 20 minutes, but this will actually adjust on the open. And then the overnight VPOC is not going to shift. It's going to be 1850, basically right where we're trading. Okay, so 1864. I'm going to use the 65. This is going to be our key line in the sand above. All right, above there, the first target obviously is going to be the value area. 67 is the confirmation. Above 67, look for them to come up into yesterday's value area. And the first target is going to be the 19 or 1870 area. This is that CLVN. And then above that, I'd be looking for the open and the gap close. Again, I don't think it's going to happen, but we have to prepare for it just in case. And look for continuation, a little bit of resistance at the 78, 75 level. 78.50 I'm going to use, and then you've got the naked VPOC at 80. The CPR, percentage of range target, is 80.75. So just above your naked VPOC. Our overnight high is at 84.50, and if they get above 84.50, look for a trip through value all the way up to 86, and above the 86, the target above is 92.25. That's our daily upside ATR target based on the overnight low at 1843.75 and the daily 20 period ATR at 48.40. Once we're in the 90s, I think it's 97.75, 98 area, and if we get above there, target, forget 1900, it's 1901.50. I can use, go to 1901, and then you've got the 05.25, and then the naked gap up here at 7.75. Look for the rule of 10 up into that 09.75 value area high. Remember that the last price before we fell out of value was at 1906. So that 1906 is going to be a major target, but because you've got the gap fill above it, I think you can just leave it out and use the 775. So my main hypothesis today is going to center around, do we hold above 48.75? We're going to gap down. We're going to get a tick gap down. So be patient on this tick gap, because we could stay down and flush down into the 42 area before we get a bounce. Got to watch how they print this morning very closely and not just jump into the one and done tick gap fill. But if we hold above 48 and we work our way up, I'm looking for them to come up into the 64 area, and I'll be looking to see if they fail between 64 and 67, and then I'll try to take the short again. Once inside the 64 and we accept that 67.50, then I think we get a continuation day back up into this upper distribution that we just fell out of again. Anything below 48.75, I'm looking for the overnight low to get taken out. 96% probability taking out the overnight high or overnight low. Overnight low is a lot closer, and this key support line gets broken. I think we test it to the low side. So just taking a quick look at the Keltner. This Keltner center line is sitting right at the 24-hour VPOC at 1850. If we hold above the Keltner center line, a test up to the upper Keltner line is going to take us up into that 56 area, or that 55.75 that we're looking at. Below the Keltner center line, a move down to the lower Keltner line will take us down to the overnight low at 43.75. Gold continues its journey to the upside. We're getting closer and closer to the magnet, and still looking for that to get taken out. They just left us behind and haven't had an opportunity to find a spot to get in, and I'm missing this whole trade that I've been talking about, going up and traveling the whole distance up here. I didn't think they'd go as quickly as they did, but flight to safety, flight to gold, I don't know. We did have the AFC win the Super Bowl, so based on the Super Bowl indicator, we're supposed to get more continuation down in a down year if you want to bet your money on that. But something to know, something to note. Anyway, that's going to complete our pre-market session. I'm expecting gold to just continue this slow grind up. Until we come back here into the 50s, I really just got to watch this runaway, and I'll start looking at taking a trade up here at the 12.1. Remember, this is the most traded price going all the way back to October 2008. So I didn't think we were going to get away from it. I thought they'd grind their way up, and that's precisely what's happening. All right, I'm going to step away. As always, trade well, trade safe, and I'll catch you on the open.